Alright, guys, I'm back. I'm so sorry for the last live stream. So I deleted the other one already. My goodness, I'm so sorry about that. So what happened was in the last live stream, which I already deleted, sorry about that. I was kind of babbling around, and of course I was very emotional in that one. Sorry about that. You have to sit through that. But I'll explain in a minute, but let me play some music. I'll be right back, okay?
Love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. And when I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm
Alright, guys, I'm so sorry about that one. So, as I was saying, I had to re-upload this one. Let's do a redo. I'm kind of glad that I get to do the redo anyway, because the last one was I couldn't get a word out. So I have not been posting much this couple of days because I was dealing with an emergency. So Toby, who, if you watch this channel before, you know him pretty well because he's usually interrupt my live stream, right? And he's a nuisance sometimes, but I had to put him down. Let me see, I'm gonna go emotional again. The 29th. So we had to put him down because he had way too much fluid in his chest, and there was some concern about his breathing as well. So what happened was on Monday the 27th, right here, let me mark it because I was watching the Gamestop run, and I apologize, I didn't post anything. I would have, if that didn't happen, I would have been so happy. Now, don't get me wrong, the price action was a lot more fun to look into, but I couldn't be happy, especially what happened to Toby. So let me put I had a slideshow here. So this is Toby. So what happened was on Monday, his nose was bleeding and we didn't know what it was. Blood was everywhere. Of course, we had to clean that up. Woke up in the morning, had to take some time off of work to try to figure out what's going on with him. So not quite sure if it's some sort of like respiratory issue that, I read an article about how it's rampant in Colorado, and some pets has died from it as well. But anyway, so it kind of died down. On Tuesday it was a lot better, but then he keeps building up more and more mucus in his breathing, and it was a lot labile. It's a lot harder for him to breathe up until then. Up until that Wednesday that we have to bring him back in for ultrasounds and all that stuff. We did every single test, so everything comes out normal. Urine, blood tests, yes, it was slight elevated or decrease in white blood cells and all that stuff. So, but anyways, on Wednesday we had to make the tough decision to put him down. And yeah, he's gone. He's been gone for a couple days now, and we missed him dearly. Every morning I used to he would jump on my bed. I would drink coffee while I'm petting him. So it's been tough. But anyway, so let's get that down. So at least so this live stream is going to be dedicated to him, to Toby, to little Toby, and may his soul rest in peace. But anyway, so I had a whole 49 minutes of the live stream on the other one, which I deleted, or going to delete in a minute or so that it's erased forever. The reason why I did that is because I was reacting to this particular clip, and I realized that my mic was not on, you guys, and so that's why, it's ridiculous, right? But anyway, forgive me for those of you who had to sit through that. But anyway, so today, so I was gonna show you the price action of this particular ticker, and we know what it is. Of course, it's GameStop, right? So I saw all this happening, and this day right here is the day that I had to put Toby down. So I wasn't, even though I was enthusiastic about the price action, that I was right all along, that, this is going to bound into the 12th, right? I'm not saying that it's not going to ever break this particular barrier or support line right here, but it seems like that price interaction is historical. And if you've been watching my channel before, you would understand, or you would know that I've been watching that level because of this historical price action right here back in 2015, right? So we've seen GameStop interact with these price range since 2015, 2016 right here. And so it's not an anomaly or whatever to see GameStop at this price point right here, or bounce off of that price point. And so if you look at the price action right here, from down here, 1184 to 17 at the top right there, that's close to 50% increase. That's amazing for those of you who are trading this. It's like a wet dream for people who are trading, but for investor like you and I, or anybody who claim to be a long-term investor, price action like this doesn't faze us at all. And of course, if you look at this right here, let's see. Okay, thank you for rejoining, all of you. I'm sorry about the last live stream. That was terrible. Terrible. And I'm dedicating it to Toby right here. So for those of you who just joined, you see Toby in the screen right there. I had to put him down. But anyway, so let's go back. As I was saying, it's like all of this volume right here. Okay. Let's do this volume. If you look at the daily volume on that one, 61 million shares being traded that day. Okay. Now that number is important because if you look at the other site right here, it's called Chart Exchange. Now this site I've been, kind of tracking that for a little bit, but if you look, hold on, I'm trying to let me see. Okay, there we go. But if you zoom in to this particular price, so what you're seeing now is a if you look at, I think line, I want the volume though. Yeah, volume line. I think this is better representation of what's happening right here. Oops. Keep getting the wrong. Sorry, you guys. Okay, so if I were to zoom in, see this right here? This shows you the off exchange, the white line right here. Off exchange volume is close to 19 million shares right there. See, 20. So around 19 million shares or so. And I think it's expressing right here. It's expressed right here. But if you look at it in a volume, you would see it a lot better right here. 20 million shares essentially, right? Off exchange. But the total volume being reported is right here. And so if you were to add these two, it would come out to be around, 61 million shares, right? Now, I don't know how this would express over there. If you look at this, it says 13 million. So if you were to look at the previous day, which is the 28th, you see how, okay, so you see how it says 14 million shares being traded back and forth right there, right? The previous day. And so let's see, previous day. So yeah, that's around 14 million shares right there if you were to add those two together. But again, I feel like each site has their own, discrepancy there. So I don't know how credible this site is. For those of you who know this site, write in the comment down below. But I use this one because I've seen people using it. I've seen Morans use it. I've seen, other people who are using trading or traders use it as well. So it's just to kind of show you an overall action of what each ticker does, right? Of course, I'm only interested in Gamestop or understanding or try to understand Gamestop. So naturally, I am only interested in that. But if you look at, the previous ones, this is like March. It seems like any time there's close to earnings anyway, there are signs of, off exchange, exempt or whatever, or non-exempt. Volume being spiked up like crazy, right? Meaning that they routing the buy order to the off exchange because, usually that's what happened. And if you look at the run up, the day that it run up, the 29, the percentage being short is around 62%. But 62% of 41 million, that's 25.8 million shares being shorted that day. So no wonder, imagine if these 25 million shares is not being shorted. The price would have been a lot higher. But even then, 50% went up that day. Or is it within 2 days? Hold on. Is that a 2 day? Yeah, it's a 2 days, endeavor right here. So within that 2 days, the price went up 50%, close to that. And so subsequently, obviously, they shorted some more, but the volume was not as high. Now, can you extrapolate that this is retail investor coming in? No, I don't think so. I think institution, has a hand in that because we've been buying, over here. Retail don't move the stock in that way. I think, if anything, the institution are starting to coming in, because they know that GameStop is about to post a profitable quarter. Perhaps that's what my speculation is. But yeah, I mean, to me, this type of thing doesn't faze me because I've been here close to 2.5 years already. And so I am, in here for the long term. As I always told you guys here, right here. Oh, I wonder why it doesn't go further down. And so I bet you anything, if you look at the earnings, it coincides with the earnings. Every single earnings, you have this spikes coming. And those are short volume, okay? For those of you who don't know what that is. Okay, let's go back to this one. Of course, I realized a portion of my reaction to Hannah and this interview here was cutting off because my stupidity didn't realize that my mic was off at the time. So yeah, down man, yes, rest in peace, Toby. Such a good boy. Just very sad, very sad. Okay, so let's listen in. Now, for those of you who was not in here earlier, I was going to react to this one. I was able to listen to it during work. Didn't pay much attention to it, but I did pick a few points here and there. And I would like to react to this particular interview. I'm gonna speed it up a little bit. Now, both of them do talk fast already, so I'm gonna just speed it up a little bit. And I will, pause time and again to kind of jump in.
Just about set. So, how's it going? It is good to actually talk to you. I know we've had some back and forth in videos and stuff, and like I said, sure. I appreciate that even though we have differing opinions on this, that it's not a situation where we're like shitty to each other. And if I have been in the past, I apologize. I don't
take it that way.
Okay.
I've been doing this for a long time, so I don't take it that way. And I'm pretty cavalier, when at times. Yeah. But you have a belief, you tell me that from what I can see and from what I've seen is you're not a believer in GameStop per se.
No.
And that's okay. It's okay. I've been doing my homework on GameStop for a long time. But I make these videos, and sometimes people get the update videos, and they don't know the whole story or the origins of where we're coming from. Me personally, like why I follow it and why I trust retail and Ryan Cohen so much. I'm down to have the conversation with you anytime. It's your show. I'll let you run it.
Okay. So I guess I would just say, I think the fundamental disconnect is that, from what I've seen at least, you primarily focus on the fact that they have like no debt, which fair enough. Oh yeah, they have no debt and a ton of cash on hand. Those seem to be your 2 points. And because of that, you assume that the company is going to continue and just grow and grow and grow. And I guess what I don't understand is the how. Like they would potentially, sure. If they acquired something, sure. Or if they pivoted the business like really hard, sure. I'm not saying that they couldn't. They certainly have the cash on hand to do it. I haven't necessarily seen an actual plan other than failed gesturing at Web3 stuff.
Yeah, initially that.
It's so interesting that, she already, preface it as a failed gesture when it hasn't been coming out yet. I feel like, I know NFTs, they're viewing it as a flop, but to me, it's not yet. Like, again, it's just in the beta. And, crypto has been slaughtered by the SEC. So it's not just GameStop that is struggling to trying to get into the industry, but the industry is still there. Remember, blockchain is a technology that could be useful at some point in time. Right now, perhaps, it's just an indoctrination of, what it could be. And again, the vision is so bright right now that we don't really know what it could be. I'm not saying, it's overhyped either. I don't want to overhype anybody about blockchain technology, but it's here to stay. It's been here. And I know institutions and all of those big guys out there are positioning themselves to massively profit off of this industry right here. They just don't know how to regulate it yet. Once the regulation comes about, you watch. I said this all the time. GameStop's going to position themselves to capture those type of market. So Web3 is not failing. it's just the beginning. It's the building block for what is to come. But that might be 10, 20 years from now, right? Again, the vision is there. You just don't know how they're going to go about doing it. And another point is that just because they don't tell you the plan is, it doesn't mean that they don't have a plan moving forward. You just don't know it yet. Maybe it's too late for you already by the time you realize what's happening, right? But anyway, let me move on to Moran's here, and his response is amazing. So
it can be the outlook and or what it looks like. But we'll go back a little bit. Right now, I'm happy that they're not doing anything. I don't want them to do anything. I'm not looking for them to spend any money trying to grow per se. I want them to be really good at what they do, e-commerce and the brick and mortar side. And so if they can generate a profit off of that, now we're at zero. That's how I see it as of right now. But I look at the leadership style of Mark Vadden and how they're mimicking that. And he just happens to be the former CEO of Chewy.com, but he also is the CEO of Zulily and Blue Nile, right? The diamond company. So this is over the last 25 years while Amazon has existed and all these downturns in the economy, he's managed to become a billionaire doing the business that way. You select a couple of key categories, things that Amazon's not great at just yet, and you try to make some profit off of it. So that's where gaming comes into play. Obviously, the pet products worked out and the child and women's apparel worked out in the past. So I think that's what Ryan's trying to do, mimic what Mark Vadden was doing for so long. And he said it. He said it in an interview in 2014 where he said, you don't build during this time frame. Cash burn rates can go out of control. You sit on cash, you wait for the right time, and then you just keep doing what you're doing and it'll all work out. So that's how I see it. But remember, I invest well beyond 2 to 3 years. I'm not a trader, I'm an investor. So I'm looking at something for 10 to 20. That's where I look at GameStop. So that's what I'm looking at right now.
See, that felt like a lot of gesturing towards the idea of like growth and responsible like use of capital. But like, I'm still not hearing like a direct, here's the plan. Like it felt like we're emulating these people who are successful, therefore we will be successful, but without specifics. And also I would argue like if we're comparing to like competing with Amazon with specific categories, something like Chewy wasn't profitable under Ryan Cohen, I don't think. Like it wasn't until later after it was already acquired and purchased and things were like integrated into like the supply chains of the already existing company that stuff started getting profitable. And even then I thought the margins were pretty thin.
So the building blocks are there. You can become profitable tomorrow. Like, Hannah, I'm just telling you, in retail period, in business, you can be profitable tomorrow. Just cut everything you want, and I can show you a profit. That's not the way it's going to happen. Building the infrastructure and the culture takes time, more than 5 years, more than 7 years. So yes, Chewy is a brand name now, and it's a calling. Like people know what it is. You say Chewy, they go, okay, yeah, that's the pet product store.com. The same thing happens for GameStop. GameStop has this recognizable name. The brand is there, but the culture is not there. For the employees themselves, the way they run their company, the way they step over, paper clips and staples to try to make this dollar for dollar. That's why he put out the letter and he said, hey guys, we're going to either need to really make a profit here, cut everything we can and do it right. But that's the structure. That's like the idea that moving forward, it's those incremental increases that'll show the profits. When people want a roadmap and a game plan, you don't tell that. The reason why you don't tell that is because I can't tell Amazon, hey, I struck gold, I struck oil, Web 3.0, this is how we're going to do it, e-commerce and discounts and however we're going to do it on that side. You don't tell anyone your game plan. Then they're going to beat you. And somebody that's bigger than you, they're going to cripple you. That's how I see Amazon winning. But yeah, I would never give him the game plan. And that's why I'm happy he doesn't give out guidance. And I sit here and I tell you, I invest quote unquote blindly as people are like try to stop me from doing it. And I'm just telling you guys, I see it bigger than that. I see the culture. When they say no one's talking at GameStop, Ryan doesn't talk. You know who does talk? Larry Chang. Larry Chang talks more than any executive I've ever seen in my life, but he's doing it through educational tweets. So anyone who's a GameStop investor that's not following Larry Chang, they should. He's on the board of directors. He's also the chief investment officer for Evolution Capital. He's the individual that I would tell you that's giving out the game plan and the map for GameStop. If you read his tweets, they're phenomenal. So it taught me a lot in business.
Okay, so I think you and I have something in common, and that is that we can both talk. We could just both talk for a really long time. But I think the problem is when you actually break down what you just said, it was effectively, we need to cut and cut and cut. And then you talked about developing a company culture, but so far the recent thing Ryan Cohen has done is basically blame his employees and act like they're the problem and then cut their benefits and hours. Sure. Like, is that what you consider developing a positive company culture where employees have good morale and want the company to succeed and do well outside of the practical, they just need a job?
I mean, I think in this particular point right here, I feel like one of the points that Hannah is telling you is that, well, okay. In her point of view, from what I'm gathering here, is that the company is stable because they have cash, they have debt. However, there's no plan moving forward. I disagree with that, right? Because they do have plan. Perhaps the plan hasn't played out yet. Because remember, I need to remind people here that Ryan Cohen only been in the company for 3 years. How much how much change do you think that he's already affecting change, right? Immensely, right? But how quick do you think, this ship gonna turn around? And I think he could do it within the time frame that these people, would make these people head spin, right? But to me, even Amazon, you think about it, when Amazon comes into the forefront of the, it's like becoming more profitable. It wasn't until like decades ago that Amazon was losing money for decades before they become the behemoth that it is today. And it's the incremental changes little by little, but it's gonna take time, right? But these people only give Ryan Cohen 3 years and the rest of the world that he's a failure, that he's blaming his employee, that he's cutting benefits in order to cause suffering to his employee. But I'm gonna let Morenz, respond to that one in a minute. But to me, those, I hate to say lower level employee, because entry level employee, obviously, as a country, I feel like we do need to be paid more, right? But at some point, as a business, you have to cut to the point where you're going to become profitable. Just like how, the culture of this particular, I feel like the country is like, the whole country is like, oh, buy now, pay later, right? That mentality has brought us to this point where we have to borrow, to the T, or over leveraging yourself in order to get the lifestyle that you want now, right? We don't want to think of it as a future. What are you doing in the future, So currently, the reason why we need to cut, and eventually we're going to stop cutting, right? Because when it makes sense, we're going to stop cutting. But to kind of rebuttal what Hannah is saying, it's like, just because we're cutting now doesn't mean that we're going to continue to cut to the point where we only have 2 stores left in the nation. That's ridiculous to assume that that's going to happen to GameStop, right? Because again, to my point, my point is that they're going to stop cutting at some point. Now, if you were to compare your own life, okay, your own paycheck to GameStop, currently, let's say you are earning like $2,000 a month, right? If you earn $2,000 a month, and then every expenses that comes out to be $2,000 and $10, right? Or $2,000 and $100, right? So that means you are in the deficit of $100 a month. So what are you going to do to kind of mitigate that, or kind of cut down? You're going to try to cut down as much as you can so that you at least break even, right? That's what I equate, GameStop, right? Currently, we're losing, $2.8 million last quarter. If you were to do a trailing 12, we lost a 90. Hold on, let me look at. I don't want to be wrong here. We only lose, if you do a trailing 12, right here. So say $100 million, right? So $100 million, trailing 12, meaning like year over year, right? What are we going to do to try to rear end that, meaning rear end, sorry about that. Kind of control that spending so that we don't lose $100 million anymore. Compared to your, the scenario that I gave you, $2,000, and then you expend $2,100. So you need to try to, cut down at least $100 or a little bit more, so that at the end of the month you break even, right? Now, if you continue to overextend yourself, you eventually you're gonna put yourself over debt. And think about it. It takes so much discipline to sit on cash. And I think the reason why I love GameStop is because they're master at, managing money. And Hannah right here seemed to think that is not important at all. Oh, just because they have cash, right? Just because they have debt doesn't mean that they're going to be successful. How do you know that? If you have cash on hand, that is the most important thing. You know why? Because especially in this environment, right? You have recessions coming. People are struggling. People don't even have money. Banks don't even have liquidity because they've been lending out like crazy. So of course, that $1 billion that they have in the bank is the most important thing to undermine the fact that they have billions of dollars in the bank. It's so like last year. You see what I mean? It's going to eat up the inflation. No. On top of that, they're probably going to buy more marketable security in order to, take advantage of that high rate right there. But anyway, let me move on to Moran's here.
So in the world of private equity, right, and I totally agree with what you're saying, to the point to shed light on it, you have to have a washout. You have to have this cleanse of the old guard. So to wipe out everything that they did or they were inflated, I've touched on this with so many different videos. The percentage that they're paying principal, they're called principal financial, the individuals that were in charge of their benefits program and their 401ks, we don't know what the percentage was, but I can tell you that private equity on the backside is in charge of that fund. So he can renegotiate everything he has to do. He can clean it all out. But these are entry-level positions that we're up for on the chopping block. These are guys that we're going to hire straight out of high school or kids. These are not working class adults at the executive level. This is not the corporate level employee. This is what they call an exempt employee, right? Or a non-exempt employees weren't affected. So, or the vice versa. I'm so sorry. Exempt employees were affected. So when you look at it, it's not just the overall culture of the business. It's just letting you know that the fundamental people that are coming in, hey, this is the new standard. This is where we're at. And yeah, I might be asking more of you for less, but that's in every form of business. Everyone's having to do more for less. This is not just sitting back and going, we've always gotten a raise every year. Well, now it's incentivized as in case, your share price is going to dictate what your bonus is because you're getting paid in RSUs. Therefore, you need to produce. Therefore, you need to cut those costs. Go ahead.
It stuck out to me, and there's a decent bit to go through there, but it stuck out to me that you were mentioning the lower level employees as if fuck them, who cares? It felt a little bit like you were like, well, these are just people out of high school, or these are just low level, whatever. People require benefits regardless of their age. That's.
Oh, you're absolutely correct. But I'm telling you is this: if you're
so are you saying that this is the only, GameStop is the only organization that does this, or a company that does this, or corporation that does this? It's where were you when, Walmart cutting benefit? Where were you when when Amazon, decades ago, we've heard of the story. We've, I bet you anything, the workers in Amazon warehouse would tell you that, their treatment is not good. The way that they were treated is terrible for Amazon, right? But nowhere did I see you bashing Amazon. Now I'm sure, I haven't watched your whole catalog of videos, so it might not be fair to me to assume that you don't say anything about these big corporations like Amazon's and all that stuff. But to me, it's GameStop only have the ability to give you a certain things, right? Or the employer certain things. Now, eventually, I hope when they become big enough, they're gonna give the benefit to working class more, right? Or the workers more. But from what I'm understanding, is that they do get, RSU, people who, the store manager, right? They do get some compensation there through share-based compensation. Why? Because, that's how corporation would love, well, at least that's the strategy is that, if you have RSU, the executive versus shareholder aligned, right? The interest between the two aligns, because the more the company makes, the better the bonus would be, right? In the future, we want to increase that culture in order to kind of cultivate people who wants to be in this company and make this company a better company each day moving forward, right? And that's why, if you were to give them the billions of dollars or millions of dollars in compensation up front already, they don't seem to care. And this is what happened to corporate America in today's society, right? Because most of the executive, if you look at the I've shown you a whole bunch of companies out there. You don't even have insider shareholder. If you look at, I think, Apple, right? They don't have the shareholder insider ownership. Let's see. Insider ownership 0.07 right here. You see that? Insider don't even own anything of this company, right? But look at the institution, 60%. So that means retail owns the other, the other float. And retail has been, I bet you anything, retail has been buying up this price point because analysts right here, they give it a buy all the time. Oh, Apple is a buy. Apple is a buy. I'm not saying that Apple is the most, it's in trouble. Obviously, they have like hundreds of billions of dollars in net revenue. But again, this is an overinflated price because look at the market cap of this of this company. Close to $3 trillion. For Apple to 10x from here, it needs to be $30 trillion. It's overblown. It's overpriced. And if you look at the PE ratio right here, 31. PE ratio should not be at 31s. You know what? It should be? It should be around 10. So to me, if you were to divide it by 3, then it should be fair value. Well, fair value for the tech company, right? I know tech company is usually valuated at a higher price than any other company because of the nature of, the over monopoly of things, right? Apple Store, when you sell your app on the Apple Store app, you have to pay Apple 30%, something like that. So of course they have the monopoly because there's so many Apple user out there, or iPhone user. And so, they have the market, just like Amazon, right? When you sell on Amazon, you have hundreds of millions of people eyes on it. And this is where the platform has so much power to, it's almost like a monopoly, right? And so, but anyway, so if you were to divide it by 3, then Apple should be trading at around $63 right now, rather than close to $200. But even at this price point, these analysts would love you to buy into it still, right? And why is that? Why? Because they own most of it. See, 60% of it. So they want to load it onto you in order to sell to you at this price point right here. So, hey, if if you want to buy into that, go ahead, do it. That's on you.
You're going to your employer and they tell you the first day in, here's what it is. Be thankful for what you have at that point. If not, find a new employer.
Right, and many have, which is why we've seen posts of people walking out of GameStops and being like, fuck this place. And we've seen on the employee subreddits, the employees have nothing but terrible things to say about this. They mock Ryan Cohen, rightfully so, I think, for his ridiculous condescending email about, all right, we need to tighten our belts. Like, is he the dad from Troll 2? What are we doing?
No. Well, let me ask you something, and I don't mean to get personal, but have you working a W-2 job? Okay, which I currently do right now.
I know you do.
I'm just asking, how many of these individuals have gone through financial turmoil and needed a job? It's slim to none almost because it's generational. So the individuals like myself that look at kids and say, you're pissed off that they're not going to pay you X, Y, and Z, you're 25, go find a different job then. I'm telling you right now,
Maybe you
there's
should
someone
demand
that's
more from
gonna
your
take that job tomorrow.
employers. Have you considered that? You should ask more of them, and if they're not willing to do so, then yeah, that's the market. You leave if you can, but if you can't, then it's a
Well, think
hostage
about what we're
situation,
doing.
basically, that you're
It's not
condoning as a
hostage,
business
it's
practice.
not a hostage. That's ridiculous. Everyone gets paid a paycheck, right? So like the idea, and this is like where fundamentally we're going to not agree, because the idea that you should be able to walk in and demand things is crazy. You should be so
It's
thankful that you get a
negotiation.
job.
That's the market. You're selling labor.
These are first world problems, not third world problems.
What the fuck does that mean regarding this? You know, people in the United States don't deserve to have health care and food on the table because they work for the company that you like?
They still have healthcare. It's the level of healthcare, the level of benefits that you're asking for. Not every corporation can provide that. You trivialize it, but I'm telling you, I've lived in
If your
third world
business model can't afford to take care of your employees, your business model sucks and you don't deserve to be a company.
That's not it.
So I would like to kind of like add it to what Moran's is saying. Yes, I mean, corporate America has been here to kind of gut everybody out, right? Of course, they want more for themselves and less for you as a working class. I get that. I get the frustration from Anna's point of view. I get that. But to say that this is only GameStop problem, this is a decade-old problem. You know, I brought up Amazon before. I brought up, you know, Walmart has been abusing their power for so long, right? You know, the power to, because they are the biggest employer out there. They get the biggest tax break. They get to, you know, cut your hours, cut your benefit. You know, the fact that they only give you a 39 hours versus a 40 hours, because if you go above 40, you have to hire them as a full-time employee. Full-time employee has benefit. So therefore, they do tricks like this in order to not pay you benefit. Where were you? Okay, Hannah, trashing Walmart for doing that. But when it comes to GameStop, who is not profitable right now at the moment, well, I hate to say that word because we are profitable. If you look at the balance sheet, I will show you another again the balance sheets just to verify what Morantz is about to say in the next couple minutes here. That you're gonna have to cut down those expenses, and it's sad that we have to cut down on 401k, and perhaps we have to negotiate a better term for the employee. And to me, I trust leadership. The reason why they do that, there's some certain reason why they wanted to do that. Perhaps they might want to negotiate a better term because the current term is not working for, the leadership, right? For whatever reason. I just so happen to trust leadership that they are doing the right thing by their company, by their employee, right? Again, corporate America. The fact that she thinks that, GameStop doesn't care about employee, that's stupid. To me, that's just, misleading, to say the least, just because they release something cutting down 401k. Since when people care about 401k? I bet you anything, there are places right now, even Walmart. You think Walmart provide 401k for people, for the cashier? Like, I doubt it. Now, I've never worked at Walmart before, so I don't know. But I worked at Michael. They don't provide me with a 401k option. It's like, it's ridiculous. It's only meant for management, okay? Even then, middle management in Walmart, I bet you anything, they hate their job. They hate being there. The reason why they are there, because they need a job to survive. That's all, right? But anyway, let's move on.
It's at what level do you get where you actually garner that pay and or that benefit? It's not for everyone. Not everyone's a Costco. Not everyone's an Apple. Not everyone's Google. So right now,
when you work for a fintech company, welcome to America, where if you work for the right company, it's okay if you get cancer, but if you don't, you fucking die.
You work for a retail entry-level company. I mean, I don't know what you want.
I would like employees to be treated fairly. Why is this not a problem other places in the world where it's not even like an employer thing?
Why is it that when private equity runs healthcare situation, any healthcare, I'm talking about old folks home, I don't care what it is, the mortality rate increases 10%. Because they cut out so many things. It's okay to cut out corners everywhere else in this world, but if GameStop cuts out one fraction of benefits to employees, it's up and all. They're terrible and they're poor business to work for. That's ridiculous.
They are. I also don't think it's. I don't like private equity and healthcare in general. That's what I'm saying. Like, this is part of a larger issue. There would be no doctors. There would be no lawyers. There would be no nurses. In countries where there's universal healthcare, there's no lawyers and doctors. In the United States, you have a right to a lawyer. We still have criminal lawyers.
Wait, I don't get this point where she's bringing up universal health care. It's like, of course we're trying to work towards I'm of a belief of a universal health care here. Of course, I'm I don't want to be political here, but to blame the fact that GameStop, but here's the thing too, like GameStop doesn't take away health care from their employee, in my opinion. But again, like, I need to do a video on the 401k cut thing, the benefit cut, because I was trying to find the that exact memo, and do a later video on that, because I'm not well versed on that particular aspect of things, so I don't want to speak something that it's not correct and then have to revise it later on. But from what I'm understanding is that they don't cut anything, that is like, the only thing that they cut is the 401k to, certain group of employee, or right. And so, like cashier and all that stuff, which already, But anyway, I'm not going to speak too much on that one because I don't know. But to the point where she bring up the universal healthcare and the fact that it is GameStop problem that they didn't provide healthcare, which is wrong, right? GameStop does provide healthcare to their employee. I don't understand why she had to bring that up.
But we're talking about here in America, where they cut out all benefits for grocery store workers, they cut out all benefits for healthcare. They've been cutting benefits across the board. That's the first thing you cut out.
And that's a problem. That's a problem.
It is a problem, but it's as in to say that it's GameStop is the problem. GameStop is the vulture here. That's not it.
Part of it? If a bunch of vultures are picking at a corpse, are they not all partially responsible for the condition?
What did they cut out for the entry level?
Okay, so if a bunch of vulture, why don't you pick on the other vulture as well that is even bigger than GameStop could ever done, like Amazon, for example. How about Tesla? How about, any other big ones? Walmart is the worst of them all, I feel like, right? When it comes to, rights of the employer or employee, they've been, the welfare queen, meaning that, they're working, most of people who work for Walmart, most of them has to live on food stamp. Think about that. Think about how terrifying that is, right? That most of people who actually have a job to go to still have to survive on food stamp. And in essence, if you listen to Jon Stewart, he did a segment. I should try to find that video, but my point is that why don't you bring all those big ones that has been decades on end, abusing employee in this way. Now, I'm not saying that it's right for GameStop to abuse employee that way, but again, GameStop is not doing it out of spite. They're doing it so that they could set themselves up for success in the future, right? By cutting costs, Unfortunately, it has to come from that particular one, but I'm hoping that eventually we're going to be better.
I would imagine a decent amount of their healthcare benefits, they have less availability of doctors to go see and treatments. That's what happens when they cut your benefits, is there's less options.
Go read it again. They didn't cut it out. They
lowered the tier, thus cutting out.
Go read it again. That's all I'm asking. Okay? Because I'm telling you, there's still benefits there for the employees. The 401k portion, the match that they took away, that's financial. That's different. You're in a state right now for the employer itself of survival because private equities attacked them over the last 3 years.
No,
they were extremely profitable.
This comes down to the fact that you think it's like to be clear, is it just short sellers, or are you big into the whole naked short sellers conspiracy?
I have nothing to do with that. I don't give a damn.
Okay. But you just said private equity has been attacking them. In that case, I kind of assumed you meant short selling, right? So short selling?
Absolutely not. No. See,
so how is private equity attacking them if not through short selling?
Okay.
Like, what do you mean? What's your thesis here? I'll shut the fuck up. I know I'm interrupting.
I'm with you, Hannah. I just want you to. There's a different story here. I have a whole series called Connect the Dots. There's 49 parts. I'm working on part 50 right now. And it's about the dots that our private equity since the 1960s have been destroying America from within, i.e. planting executives on the board of directors for all companies. And I've shown the web and how they destroy them from within with just for fees, just for the 2 and 20. And if you don't know what 2 and 20 is, they get back 2% of the initial investment and 20% of all profits. But they do that based off of what? They're passing around these companies to each other. And I've explained it in detail. Connect the Dots, brand. That's why I was able to call Bed Bath & Beyond's bankruptcy in detail and how it's systematically getting torn apart and whom were the individuals that were doing it. And I've shown it. So when you look at GameStop and they don't have private equity in there, they pushed them out. They pushed out KKR. And when they did this, I said, oh, goodness, he went in there. He did the takeover himself. He put his own money up. Now they're attacking him on freight. They're attacking him supply chain and every other aspect of the business. This is why GameStop's the juggernaut, because they all bet on it. They do a thing called jumping, and that's quote unquote jumping. It's been in a lawsuit for the Caesar's Palace coup. That's a book that you can read as well. But 9 private equity firms jumped in and tore that apart. They cut it up. They do vulture capitalism. But when you saw them jump on GameStop, everyone went and shorted the stock, yes, but they were jumping on it because they had the green light from KKR, from Apollo, from Ares, from Bain and Company. They're all out there. I've talked to the Carlyle Group. So many private equity firms that destroy companies from within by putting their executives on the board of directors. They've been doing this since Drexel Burnham Lambert, the only hedge fund to ever get shut down by the government for doing this. And Mike Milken, the Milken Institute, I have connected dots. That's what I talk about. That's why when you look at it and you're naming a company and you want to attack them, you don't know who's on the other side of it. Private equity owns the 401k deal for GameStop that they just bought into when private equity took over there. They destroyed this company for the last 14 years. And now they're repairing themselves. AMC's been destroyed for 23 years. And that's because private equity bought them out in 2001. Adam Aaron worked for Apollo directly for the last 25 years. It's a private equity's wet dream. That's just what it is. And for the lack of a better term, I apologize. I don't want to offend anyone. But if you know my angle, it's private equity. It's how it's ruining America and all the companies within it. Carvana, Bed Bath & Beyond, Mullen Automotive, AMC, and of course GameStop. But GameStop's the only company that pushed them out right now that we're speaking. You want to talk about controls? You want to talk about how companies run? That's Target, that's Kohl's, and that's not GameStop. But they're run wrong. GameStop's not. They're doing it the right way.
Okay, so what I'm gathering from this is basically you're looking at situations of vulture capitalism where like companies will go in and do like leverage buyouts or buyouts of things like Toys R Us when that happened, go in, tear the thing apart, understand, basically sort of a managed decline is what you're trying to describe. Is a managed decline where they can then part it out for profit is what you're describing.
It's been noted that they do it on purpose. They make bad decisions on purpose. Like they over leverage themselves or they do share buybacks like when they don't have the cash to do it. They'll even sell their assets and lease them back with the leasing company, be private equity. And they always get the direction from some type of leverage buyout firm. It would be like Macellum, Ancor, and Legion Partners. 3 hedge funds go in and they jump on one company. Okay. And they did that with Bed Bath & Beyond. They do that with Kohl's right now. They've done it plenty of times. Some people fight them, some don't.
But currently, as you've stated, and I understand you're saying that now they're clear and they're going to build themselves. You're saying that because they're clear of private equity interest, you believe that they are now a successful company. I think the problem here is that you assume that if you are, let's say, an entity that wants to ingratiate yourself into a business, into a managed decline where you can then part it out and make money, it wouldn't make sense to do that to a company that's doing really, really well. What you would do is go, what businesses are already in decline that we can then take control of and make money off of? You don't manufacture, the entire decline, you manage it. You manage the decline, you don't manufacture it. And that's the difference. GameStop's price didn't go down and wasn't failing just because of private equity interest. It's because it's a bad business model.
Well, how did it become a bad business model in the first place? Like, how is it that it just go over her head? Like, what Marantz is mentioning is the fact that you have people on the board of director, and you could probably trace them down, that have relation, or at the very least has worked for, private equity, Apollo, the like, and BCG or whatever, right? That wasn't sitting on the board of director of GameStop. And the reason why they don't do that, the reason why all of these bad reputation that these people keep bringing up about GameStop being a bad business, they're not doing this, they're not doing that. The employees I don't know. I can't even think about it. But what I'm trying to say is that the employee are complaining about leadership. All of those shitty things that they, come out about GameStop has been because of private equity. And, I think this chart right here, and again, like, I'm going to bring this chart up. Again, this is from my other video or live stream or whatever. But, again, Ryan Cohen just got here for less than, actually 3 years, right? This month, 3 years already since Ryan Cohen got into GameStop, right? His influence is 3 years ago, okay? But all of these years that's been private equity owned, these are the reputation that Hannah has been spewing out, Illuminati has been spewing out, saying that they're the most terrible company to work for. Those has been a result of private equity, right? And those reputation, Ryan Cohen is trying to override, right? I know it's going to take time for us, right? And I think Ryan Cohen does a great job right now at the moment to try to clean up the balance sheet as much as possible so that we could set ourselves up for the future growth of the company, right? Now, again, we still have, work to do in order to make hold on, let me see. I'm looking for the net, okay? Net income to be positive. When we have a trailing 12 positive net income, then we'll do wonder, right? But if you look at this right here, this is a trailing 12 again, from $500 million loss to now $100 million loss. Do you not see the trend there? And if you still kind of, like doubting what Ryan Cohen is trying to achieve in this particular company, then, at the very least, you could say, well, at least they lose less money, okay? And so now they could set themselves up for a better future, right? Like I said, let's go back to the example that I give you. If you earn $2,000 a month and you spend $2,100 a month, right? You are in deficit $100 a month. How are you gonna set yourself up for the future if the next month you're gonna be in deficit another $100? So now you're down $200 in 2 months. And if you're not increasing your revenue, which GameStop has been able to figure out a way to keep the revenue level, right, down 1% or so, or 4%. This is trailing 12, okay? But by only cutting half, right? Sorry, cutting the number of stores, cutting the expenses and all that stuff, right? In order to bring that $100 into at least breaking even, right? Again, like it's comical for these people to keep saying that, oh, private equity is not the problem here, or these people who are shorting the company is not the problem here. I get it. If you have a market that has zero conflict of interest, meaning that these people who are shorting the company are independent of the people who are in relation to the board of director, which we have proved that they actually connected to each other. That's why Moran's has done connecting the dot in order to bring awareness to people, that yes, even if the people who are shorting the company are independent of that, they probably rub shoulder with each other. They probably passing each other by saying, oh, what are you doing? Oh, you're private equity? What company are you involved in? Oh, GameStop, really? And if you know that these people are private equity, their game plan, of course you're going to short GameStop because by association, right? My point is that these people probably eat dinner together. They know each other. They know of each other. Therefore, the people who are shorting the company, they are egregiously short the company to oblivion, right? Is influenced by that. Doesn't matter if over here it makes no sense for them to short. They still short it because they want people to say, oh, GameStop is going bankrupt. But if you look at this right here, and I kind of lay out on this one as well. If you look at from 2009, okay, to 2020, like within this year right here, when you get GameStop at under $1, at right here, you see that the shareholder equity is a lot more. It's like, you know, you the amount of money, the market cap. Let's go get the market. The market cap of the company at the time was actually lower than the shareholder equity. This is the gold mine right here. If you could find any company that has a positive shareholder equity with no debt, you know, at the very least with no goodwill, and you still have $400 million, and then when you look at the price, back then, 2020, right, around here, you see it at around $200 million or so. Then of course that's the opportunity right there. And the private equity, you know, angle of it is important. Why are they continue to short this company right here when it makes no sense for them to do so, because the asset alone, the shareholder equity alone, is more than the actual company itself. It's a no-brainer when people are buying over here. Okay, and that's why you see the massive move there, and we're still, you know, dealing with the price movement until today. They've been battling this company until today. You see what I mean? You see this? This is a sign of trouble for these people because they bet more than they could lose, and they can't stand to lose. Right? But anyway, because they're big, they have connection, they have everything, you know, against retail. And of course they have media backing them up as well. That's why you see article. That's why you see people like, now I'm not saying Hannah is being paid to do her video, but you know, you've seen it. You've seen Dan Olson, you've seen Illuminati. You know, this lady right here, up here, you know, suddenly making GameStop video all of a sudden saying that they're monopoly, that they're a terrible business, that they're ripping kids off, right? Off of used game, you know, everything in the book. But anyway, let me continue with I rant way too long.
Not at all. The balance sheet doesn't support what you're saying.
When's the last profitable year they've had? I think it was 7 years ago was the last profitable whole year.
It could have been 2018. I'm not familiar right now while I'm sitting here in front of you. 2016, 2018.
8 years ago. Better, sure. Almost a decade we're talking since they have made a profit.
Yep. And we're on the right side of
solid business
history,
model. That is a solid business model. 8 years without a profit.
Yeah, you have to know what happened. They actually they destroyed the company from within. And by doing so, they lowered the market price, the market cap all the way down and burned off all of their goodwill on their assets. Therefore, they took an impairment charge, a loss of over $1 billion. And that hits the actual balance sheet. So it makes it look like they're not making money. But in reality, they still are making money. That's why they were able to pay out a dividend. And you say, why the hell would they pay out a dividend? They have no cash and they just lost $1 billion. Because they wanted to deplete all the coffers. That's the complete opposite of what they're doing right now. But when people learn how GameStop's operating with zero goodwill and still have $1.2 billion worth of equity with only a $30 million cash burn for the year, annual cash burn, we're looking at around 10 years, 30 years worth of business just based off the current cash rate. So there's no way anyone that tells you they're going bankrupt, the business model doesn't work, doesn't understand the industry. If you
literally just said they're burning cash. They're burning cash, and
$30 million, Anna.
Okay, but why are you assuming that is static and that the losses aren't going to increase over time? You're acting as though there's nowhere to go but up.
So I could say the same thing the opposite way. Why you're assuming that they're going to continue burning cash? If there is evidence, at least what I see here, that they're burning less and less now at the moment, right? You have operating income right here, 120, whatever, but they used to burn $500 million. So are you saying that next quarter coming along, they're going to burn another $500 million? Like, how is it that you continue? I can't continue or I can't assume that there's no way but up, because there's evidence right here in front of your face. Let me fit so you could see what I'm seeing right here. Okay. If there's evidence that tells me that they have been burning less cash year over year, and this is a trailing 12 months, okay? Not some, annual here. Okay? Quarter. Let's do trailing 12 because it's more comprehensive. I like trailing 12 comparison because, again, it accounts for year on year, And, if you see that they're burning less and less cash, how is it that you're assuming that they're going to burn coming this quarter, the reporting quarter, they're going to burn $500 million cash? Like, that assumption, I could say the same thing, right? So the way I look at it is that my assumption is a lot better because they're going to continue to burn less cash because the trend is over that way, right? But we'll see. We'll find out in a couple of days or so. We'll find out.
Meanwhile, the market of video games is going away from physical, which we've talked about.
Okay. Well, you can stop that narrative for a second. Let's just talk about this for what we're talking about today, not where they will be. I'm talking about today. They're profitable today. They showed a $2 million loss for the quarter, but they had marketable securities purchased $50 million and inventory increase of almost $90 million. You're talking about $130 million they didn't have to spend, and they did it anyway. They're hiding their profits. I've been saying this for 2 years. They're profitable today. You guys just all
having
look at the
expenditures isn't hiding profits. Using money now to potentially make money later is a cost of doing business. That doesn't inherently mean they're going to make a profit on those investments later.
I disagree with that. Yes, expenditure. If they use that money to buy more marketable security, it's given because the marketable security is going to give them some interest, right? Now, you could argue that, it's not going to keep up with inflation. Okay, I could agree with that. But to say that they're not going to make money on a guarantee basis, that's foolish to think because Treasury do pay you something. So at least they're not they're not going to burn it, so to speak, in your words. They're using it in a way that hopefully could make them a little bit more, right? To cover whatever, perhaps to cover that $2.8 million loss that we saw in the last quarter. So yeah, we'll see. And the point where Marantz is saying that they're hiding, it's just, here's how I'm thinking of it, right? You see, if you look at the trailing 12 right here for the last quarter, this is quarter 2, right? $259 million cash flow positive. That means something. It means that day to day, they're profitable, okay? Profitable in terms of cash flow, okay? Now, for those of you who doesn't know what cash flow means, free cash flow is the cash remaining after company spend on everything required to maintain and grow the business, okay? So they're profitable. So that's where Marantz was saying is that they do come out positive, but it's just that the operating income, it's lower for whatever operating expenses and all that stuff. We need to still working out that, right? Hopefully he could solve some of that issue and burn even lesser cash Instead of 100 million, perhaps it's going to come down half of this. Even next quarter, if they were to only burn $50 million, they still come ahead, meaning that, of that $1 billion that they have on hand, they would have $50 million less from that particular pile. But the point is that they're not going to go to shareholder to dilute the float anytime soon, in my opinion, right? So that's the point. Unlike AMC, for example, if you were to compare AMC to GameStop, what happened Adam Aaron to Adam Aaron, Ape, the whole debacle, right? Oh, Ape's going to save the company. Fast forward later, he's been selling 20% of the company or 18% of the company just in one offering. Come on, it's ridiculous.
I'm making the bet that they're going to be profitable over the next 10 years, and you're making the bet saying no. Is that correct?
Profitable year over year? Can you give me an exact? Let's be more specific.
Trailing 12. Right now, trailing 12. They're going to be positive.
I don't even think that's unreasonable. So no, I wouldn't make that bet. They might be profitable, but I don't think it justifies the price that they're at, and I don't think that means that the business is going to be existent necessarily.
So what do you think? I mean, what do you think retail trades at? I'm just curious because you seem somewhat intelligent about the trading and what it's actually worth. I'm saying GameStop's trailing 12 is positive in a retail sector that's in a decline for everyone, not just GameStop.
Yeah, that's bad for GameStop too, though. There's still retail just because they're.
Yeah, it's bad for GameStop, but they're bad less. That makes no sense, right? Bad less. It sucks for GameStop, but they suck less for being a company that been struggling, so to speak, right? If everybody's struggling and the big guys out there, the Walmarts of the world, the Amazon of the world are struggling, GameStop is struggling less than them because they have the ability to kind of contract without hurting themselves. While Amazon, on the other hand, when they are contracting to the tune of hundreds of billions of dollars, okay? And so, when they're contracting hundreds of billions of dollars, that is huge for them because they need hundreds of billions of dollars in order to cover their operating, whatever they're doing to their balance sheet, so to speak.
In a sinking boat with other people doesn't mean they're not in the boat.
Sure, but their shareholder equity is in the positive $1.2 billion.
Okay, what are they going to do with it?
Oh, watch this. They don't have to do anything. You're saying value. You said you don't think that the stock price equates value. And if we go with the current stock price right now, they're trading at around 26% equity per share.
Why are you advocating them spend? What are they going to do with it? They don't have to do anything, to Moran's point. They don't. When you're sitting in cash in this environment, you are king, right? Why? Because when everything comes down, you have the opportunity to jump into anything. Again, banks need liquidity, okay? And there's another thing too. The reason why they would want to sit, or why it's important to sit on that $1 billion cash is so that you don't have to run to the bank and say, hey, let me borrow $1 billion to expand my company. You think that the bank's going to lend $1 billion without cutting GameStop an arm and a leg? No, you have leverage over having to borrow money in order to do business, right? When you don't have to borrow money to do business, you know what happened? You're going to grow much faster than people who are borrowing to do business. That is the most important thing that people don't realize. It's and at this environment too, you think that GameStop could borrow $1 billion on this rate at the moment? 10%, 15%, 12%, just like AMC did? It's really? Do you really think that that's not a valuable thing to have? Cash sitting in the bank, just stay put. Right? I'm tired.
There's not a single company in retail, not a single one, and I've checked them all, that trades at a better book value than GameStop with zero goodwill. They're not propped up on assets. They're propped up on what they're actually worth. So
they're not what they're actually worth, though. They're propped up on people who are really, really interested in them for meme stock reasons. And I know you hate that word. I know you hate that word when applied to GME. I get
they're
it.
a blue chip company. They're a blue chip company.
They're a blue chip company.
Absolutely.
Can you justify that statement and don't go on like a 5-minute diatribe? Give me a sound bite. Justify that statement in a way that isn't a buzzword.
Yeah, they were in the S&P 500 before. They're going and they will be again.
Past tense.
Yeah. Private equity put them out. I mean, I can say it 3 times like you, but that's not going to.
That's kind of childish for her to say there. It's like, what is your point? It's like, okay, they used to be in the S&P 500. You know which other company that had done that before? Apple. Yes. Amazon, I bet at some point in history, it's probably, happened. But again, it's just because they used to be in the S&P 500, it doesn't bar them from becoming, from getting into S&P 500 in the future. They just need to have the qualification to be in it. And I hope Ryan Cohen and the board of director or the leadership in GameStop is going to work towards that, right? Slowly, right? Because again, the slower they do it, the better the foundation for the company to grow, to set themselves for success in the future. Okay, yeah. But it's ridiculous. Like, these people just assuming the worst of the worst. But perhaps I'm just biased because I own GameStop, obviously, right? And I'm only seeing, GameStop in a certain light. So this is why I appreciate, hearing different point of view, different, roadblocks out there. And this is why I seek people like, seek to watch people like Hannah Reloaded, to see what their point is. And every single point is just like, really? It's like, so 10 years ago, right? They bring up what happened to GameStop 10 years ago, or 3 years ago, or 5 years ago, and they just disregard what's happening within this last 3 years, right? When Ryan Cohen got in.
Put any more emphasis on it. I'm letting you know that value, dollar for dollar, it's the best buy you can do right now.
Okay, again, you're just vibing. You're not saying statements other than just buzzwords. This is amazing.
Profitable. The trailing 12 is profitable. There's one thing that's going to happen right now, and you're going to find that out in the next, 120 hours. Second, they are a profitable company, period. So where do you find, don't even go into the idea of the things they are doing, but to know that they have so many things, I call it the hidden figures. If you haven't seen that video, it's called Hidden Figures. They have so.
Let me talk to you about Player, right? Now, Players, again, it's a concept, right? It's about to come in the couple months or so, hopefully in the earnings report, right? If not next year, right? Sometime next year, to try to capture some of the, whatever. But anyway, it could be a platform to where, you could you could stream live, video games. It's like there's so many things that they could do with that platform, right? Again, it needs to be built. It needs to be thought of first. And it's Web3, meaning it's building on blockchain technology. So I bet you anything, they're waiting for the regulation to be right first. And then they could pivot, they could position themselves to be on the right side of the law. Because if you were to just developing it right now without, knowing what the law is, these regulator could come after GameStop for, doing a better business, right? I don't know. But, the business that they have, they're being careful in that sense, I bet you anything. But again, they know that the future is to where, you could own your own digital footprint, hopefully, right? That, this big company is not going to be owning your code, the digital download that people are thinking about all the time, that is juggernauts to kill GameStop killer or whatever, is it's like you can't own your own digital footprint. So what's the point, right? And so you would have a platform, and I think you already have that platform. Could be, on the GameStop NFT marketplace. That platform is still on. It's just that, again, it needs to be worked into the regulatory frameworks first. And so that's what we're waiting for. But in the meantime, the business that they have right now, it's good. It's stellar. At least we're going to survive for a little bit and then going to thrive later on in the next 5 years, right?
So many things hidden within their actual 10K and 10Q. They're profitable by about, I'd say, $300 million a year. I'm ballparking the number, and that's an easy number. So after 5 years, put them another $1.5 billion in the bank. What exactly do you think they don't have? Like, they're that. And then when that business model,
they have a business model that's going to be profitable long term at the footprint they are at. Even if they are, again, maybe they'll shamble along, maybe they'll shift a bit. But right now, if GameStop as it currently exists,
the demise is coming. No, you didn't say they're gonna shift and they're gonna be okay. No, you said they're done. I've seen every video you put out.
I think that they'll probably go away. They have a lot of cash to burn, but unless they do anything, if they stay in the state they are in right now, yeah, I would think in 10 years they'll be out of business or so small and regional that no one even knows they exist, except for people who have them in their town.
Well, guess what? We have plenty of time to watch it play out. I really appreciate you, young lady. I will say this respectfully, Hannah. I've heard every point you've ever made. I went and told myself, and I had to counter it in my own sense because I watch your videos offline. I don't watch them like when they're live and stuff. Yeah. And I said, okay, she's wrong there. She's wrong there. I understand why she thinks that way. She's wrong. She's wrong. There's stuff that you don't know yet, like the private equity angle.
No, I understand the concept of that. Like I used to work at Toys R Us in like college. I worked in Toys R Us for a little bit when that was all happening. I know about it. I just think that you're fundamentally assuming that only one thing can be the cause of an issue, and GameStop can be a victim of a general economic culture of that sort of vulture behavior, and also be a bad business that doesn't have a future because of shifting landscapes in retail and gaming. Like, I gotta ask, what game do you play? Like, I genuinely, this is not, I'm not trying, this is not a gotcha. I really don't know. Do you play video games?
More than a little. I'm
Awesome.
one of the top players in the world, TFT. I own, 3 PlayStation 4s, a PS5, been gaming my whole life. Man. I'm an avid WoW player. I do RPGs. I've played everything in the world. So I love video games. I love GameStop.
Me too. We both like games and we hate PP. So we have more in common than we do differences.
The word hate is strong. Okay. I don't necessarily hate someone. I dislike the fact that they went after my family, my kids, and all that nonsense. I really don't care. I don't elaborate on that. I want to talk fundamentals. One last part to you, just in passing. When we are correct, the guys who actually believe in GameStop, because we know what gaming is, and we know it's this compound growth. The average e-commerce shopper shops more and more each year. It's layered growth. They don't go away. You're going to find out this snowball that's been rolling downhill is bigger than you could ever imagine. I'm telling you, they're hiding the profits. People just don't understand it until they see it. And the people who watch the channel, watch the balance sheet, they see it. Again,
hiding, saying that they could theoretically have fewer expenditures and be profitable is a
no. I'm telling you, $100 million swings every quarter for the next 4 equates to $500 million of profit, and it's been happening. They did I believe it was $115 million, $113 million swing last quarter. This one's going to be $100 million. The next one's going to be $100 million. The next one's going to be $100 million.
Why are you assuming that it's increasing? Like, why are you assuming that it is a steady growth rate of like $100 million per quarter? Like, you're saying things that sound nice. I'm sure if you're invested in the stock, but you've not justified a single one.
Balance sheet. I study margins.
Balance sheet. Buzzword. Yeah. Like, you can't say it. You gotta.
Buzzword? Since when people get excited about, let's go read the balance sheets, that's not a freaking buzzword. It's like, what are you talking about? It's like, how about you? When you use the term bankruptcy, they're not profitable, they're a shitty company, they're whatever. How about those? That's not buzzword to your side? But when people are like, hey, go look at the balance sheets, try to understand what's happening within this 3 years of GameStop, what do? You're like, it's a buzzword. Really? Balance sheet is the buzzword, you guys. Come on. Like, anyway, whatever.
You gotta explain what's in the balance sheet that you're saying is doing this.
You can be an alien and you'll still know the math, and it's absolutely correct.
What's the math?
Have the margins. The margins of, did you see the profit margin last year? It was 21%.
Wow, that's impressive that they still didn't make a profit all that year then.
No, the gross profit. This is not net. Gross was 21%.
Net's what matters.
No, it's but my point is, it's the lowest it's ever been in the history of their company. They just went up to 27% the last 2 quarters. They're going to be up at 27, 29%. You annualize on an inflationary number. The supply chain issues, everything they had going against them in 2022, the SG&A that was blown out of the roof. All just hidden expenses.
What about the problem of their most historically profitable like sector, used gaming, continuing to shrink as digital markets continue to grow.
That's the margin of profit. It's not the actual.
Historically, in their most profitable years, that was the sector that made them the most money.
The sector that makes them the most money is accessories right now. Accessories
right now, when they are not profitable year over year. Previously, in the past, when they were profitable, the thing that made them money and made their business model successful.
I
know. I feel like I'm taking crazy pills.
They are profitable right now.
Not That's why on paper. They're really not. Not year over year.
They missed it by $2 million last quarter.
Oh boy, they only were down.
All right, so I think the reason why she think GameStop is like not profitable at this moment is again like it's pretty complicated. Even me, I try to understand it myself as well. I think that she's trying to if you look at the annual, this is annualized. Okay, it's like from first quarter to fourth quarter, right? So annualized, obviously, you see on paper that they're down 300 300, let's say around $300 million right here, right? Last year, this is 2020. It's already been, reported. Now we're into 2023, obviously, right? We still have 2 more quarters to go. Obviously, we won't be able to see this fiscal year number yet because we only have 2 quarters of reporting. We're about to have 3 quarters of reporting, and then we'll see kind of like on the ballpark how much money they're going to be able to generate in the net income aspect of things, right? And this is why it's important to talk about trailing 12, to look into a trailing 12. You see what I mean? Because again, the trailing 12 tells you an overall, a more current price or current reporting, right? And that's why you see this type of number and you'd be like, oh, what's going on here? But, if you look at the cash flow right here, look at this. The year that Ryan Cohen got in right here. So we used to lose $500 million right there. But the year he got in, the end of this year, right here, we were making money. You see what I mean? Look, free cash flow. So we did make money, so to speak. To Moran's point is that the reason why we reported a loss right here, up here somewhere, I think it was 2019 or 18 or so. Well, man, was it right here? The reason why we reported a loss there was because of the goodwill, right? And if you look at the history of this company, obviously you would understand what that means, is that goodwill was being impaired at the time because of the price of the company itself, or the price of GameStop at that point was so low that the goodwill was impaired by that. But if you look at the free cash flow for that fiscal year of 2019, it was 200 and around, today's numbers as well. Let me see. Yeah. So they do make money. It's just that the operational loss was a lot higher due to the impairment charge. But again, that was already addressed by the fact that Ryan Cohen kind of got in and influenced the board of directors to, at least sell some share into the run without, impeding on the run by, at least raise the money, $1.1 billion cash that we still have until this day. See what I mean? So the fact that he's been sitting on that $1 billion and was able to turn this company around with that cash position still intact, right? While, doing all this stuff, like even losing freaking $500 million in the 2001 was still, a drop in the bucket, compared to any other thing. But anyway, so to Hannah's point is that the reason why she said, oh, on paper, this fiscal year they lost 300 million. But if you were to do the trailing 12, which is why it's so important for people to do a trailing 12 right here, you see a different numbers right here. You see what I mean? And again, this is a lot more current, price point to go by, or a current number. So there we go. All right, let's try to finish.
$2 million, correct? Last quarter. How about the whole year? This is what I'm saying. Yeah. Anyone can point at quarters and go, look at, we made a profit that quarter.
Hey, you want to meet up next week? I'll be here. Trailing 12, they're going to be positive.
Of course.
So your whole narrative is out the door.
Especially this quarter with Ryan Cohen, and I talked about this. Ryan Cohen's the CEO, and he is going to pull out all the stops and make sure that this report shows he cut where he's cutting where
it's already going to happen. This is why I know you don't watch the show every day, but that's okay. They were already profitable last quarter.
Yes.
You already knew that.
But they haven't year over year.
They were already profitable. Did you know that when they showed a $51 million or $48 million loss, no, $51 million loss, quarter one, the $51 million is actually hidden on the SG&A as an expense towards the commitments that they already had from the previous 2 years. They're paying off things even now. This is why the SEC filed a letter to them and asked them to be more direct on this one, on quarter three, SG&A byline. They actually have to tell you what makes up it because they're not telling anybody. I'm telling you what they're hiding. And the letter's there, and I already talked about it, and I touched on that. They're literally hiding their expenses because they have been paying things off that they're getting ahead of it. They're so far ahead.
Didn't you say they already have no debt? What are they paying off? They had no debt.
Okay, there's a difference between no debt. There's corporate debt and operational debt. Okay. So if you don't know the two, no,
I understand what you're saying. Like I understand what you're saying.
There's long-term liabilities and short-term liabilities, and there are no long-term liabilities for them per se. They are running a great business, and I'm not gonna let people just shit on them for it. I'm telling you,
I'm not shitting on anyone. I just don't think that the value is currently justified, and it's clearly still on the momentum of 2021.
I mean, what is this justified? Wedbush put them at $6 when they're at $4 cash. You can't buy this company for $2. You can't buy it for $2. That means it's only worth $600 million. They sell $6 billion in sales. There's just
again, revenue versus profit. PP does this shit too. Yes, you can have high. If you get your company big enough, you can have really high revenues and still not make a profit. I can have high revenue selling $1 for 50 cents if I really want. It's just not reasonable.
I'll do it to a different way so that you'll understand it this way. The current ratio, assets to liabilities. I have no notes in front of me, Anna. I'm just talking to you. The current ratio is 2.2, 2.18, whatever it may be. They're over 2x on assets to liabilities. This is the perfectly run company that no one wants to talk about. Everyone wants to look at top line, bottom line nonsense. Listen, they're running.
All these people want to look at the profits of the company. What's their KD ratio? That's what I want to know. I will invest in a company with a good kill-death ratio.
I don't know what that means, but whatever. I mean, revenue, yes. I mean, top line revenue, obviously, that's what people have been watching, and this is what, is important for the Wall Street people, obviously, and this is why they're like, their revenue is down by 40%, blah, 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 right? They don't understand, like, okay, well, the reason why the revenue is down by 40% decrease was because maybe bad management at that time, right? Perhaps they're doing that on purpose, right? At the time, this is before Ryan Cohen got in, and they're sure that GameStop was going to go under, and that's why they've been shorting it until since 2014, perhaps even earlier than that, right? But it seems like back in 2014, right here. Or 13 right here. You see that the price decline is so egregious, right? There's no buy volume whatsoever. But what happened is that people began to pay attention to this company. Perhaps it's because of Reddit. Well, sure. Reddit kind of brought it to light, disagree with the thesis that GameStop is actually a terrible business, or at the very least losing money. And they're not making money, and they're not profitable, right? That they don't have anything anymore. And that's been the narrative ever since. And again, Ryan Cohen is trying to overcome that narrative, and hopefully he's successful at it. And I feel like he's been successful at it, at the very least, been showing you at least 3 years worth of balance sheets to go into. I know it's a buzzword. I'm sorry that I used a buzzword. Of balance sheets. Well, anyway, I'm kind of tired, you guys. I apologize. Hi, Lynn. I like how Hannah said the GME is going under, but she doesn't want to bet on it. then contradicting herself by saying GameStop will be profitable in in a couple of years. Tell ya. Yeah, I mean it's ridiculous, right? And again, like, these people are contradicting themselves all the time because they use the old narrative, meaning the old narrative from 10 years ago when private equity used to be in it. And again, this is the playbook, right? And I'm sure, again, if she's not being paid to do this type of rant or this type of attack to GameStop, then she's probably buying into the same narrative by reading those articles and believing in the mainstream media spin of things. But hey, she could be right, perhaps, right? But it's remained to be seen. But my point is that Ryan Cohen has been demonstrating through balance sheets, through numbers, and number can't lie. Yes, there might be little hidden things, numbers that you might not understand, but you could, find out right away. Where are they hiding their profit? Where are they hiding their expense? Where are they doing that? If you know where to look at, and kind of like, hey, understand the balance sheet on the fundamental level, right? And to me, the best metric is the cash flow, right? Cash flow, again, it's the measurement of cash remaining after the company spent on everything required to maintain and grow the company. So if you have $250 million every single year, you could use that $250 million to grow even more, right? Hopefully, you're going to be able to sell more money, and then the cash flow positive is going to be a lot higher. But if you look at the historical, the highest cash flow positive has been 700 million right there in the year 2013. That's the highest it's ever been. But if you look at the net income, it's around $400 million for the net income for that year, with the highest cash flow, right? Now, compared to today's net versus cash flow, that's why I was going to do the percentage there to try to figure out what's the percentage difference between the two. And the reason why we do the percentage is because, again, in relative term, if you were to compare today's number based on the stores and all that stuff, the ratio kind of give you a more comprehensive way of looking things and comparing apple to oranges, or compare different years with different circumstances, but at least you could see, okay, what's the ratio here? And again, this is why people love to look at the PE ratio and all that stuff in order to evaluate the company correctly, right? But man, it's been a long time. I feel like I need some water here. But anyway, I would encourage you guys to rewatch this interview again and kind of like form your own opinion on these things. And it's I know, like, I have my own biases. And again, like, this is why I seek these type of people that disagree with me. So at the very least, I'm not like kind of put my head in the sand here, right? Of course, the reason why I believe in the GameStop is because of the Ryan Cohen, first and foremost, and also the gaming industry, and also the blockchain industry and all that stuff. So, I mean, they have so much future ahead. It's just that it's a bit unknown. It's a bit speculation at the moment because of we don't know where GameStop is going to be. But I guarantee you, if they're focusing this much on the balance sheet, again, buzzword, I'm sorry, cleaning up the balance sheet, cut where they need to cut in order to, even out this number right here so that we don't overextend ourselves every single year. that is the first step that we need to get into, right? Once we achieve that, anything could happen, right? Meaning that we could do anything. When you are debt free, you could start from scratch. So that's what GameStop is trying to do. Hopefully in a couple of days, we're going to find that out. Now, let me leave you with these thoughts that I have. Now, we have like Black Friday already and, you know, Cyber Monday or Cyber Weeks and all that stuff. Like all of those deals still going on actually, you know. But if you look at, you know, what is happening lately, I think it was this guy right here that I'm been watching. Now Marantz has shown his video before, and this is how I got it. I got exposed to his thread here. Let's see. Which one? I think it's this one right here. So let's listen in. And I'll explain to you what I'm gonna.
Faking their price changes for Black Friday and for Cyber Monday. Check this out. And I got a solution at the end.
As we are getting scammed, and this is not just in department stores, this includes things for Cyber Monday.
Regular price is $1.99, right? Black Friday price $1.89, so you're saving 10 cents. But in reality, it's $1.69 original price.
You're paying more. Chrome extension called Kepa will show you the history of the item. It's never been any other price than that price except for one day.
They're on sale for $20, but I can 100% tell you these were the same exact price yesterday.
$16.99 like versus the $80 that it used to be. So I go on over to Honey here and I put last 120 days, and guess what? No price changes. It's always been $16.99.
This item isn't actually $122 off. You want to go into the listing and see what the regular price is.
So if y'all got scammed for Black Friday, sorry, your fault. You're trying to buy things on Cyber Monday, I got an idea. Go right here, click on that. That'll take you here to my website where I've got some free resources for you. Spreadsheets with brands. Those will take you to spreadsheets like this, where it'll help you understand that all of these products are owned by mega corporations that are all gonna lie and scam and try to cheat you out of your money. And instead of buying from like Procter & Gamble or Unilever, instead of them, come down here and buy from people like Risa Barash.
And I would add to that list GameStop, right? Yeah, and there's a reason why I say that. Now, you know, and it's true, like if you were to go to any department store right now, anytime there's deals going on, you know, even on Amazon, right? They would tell you, oh, it's 50% off, but the price is still the same. And I've bought things before that, you know, was on Black Friday because that's the mentality, right? Oh, if it's Black Friday, it's a good deal. And it never is a good deal, but until I go to GameStop. And if you think about like, okay, let's see, how do I verify that this particular price is the actual, you know, discount? How? So you just Google it. So if you were to Google it, now, okay, before I show you that, let's go back to the guy. Now, I don't see any Illuminati video showing how other corporation is scamming other people. Imagine if GameStop doing the same thing. What would GameStop go through? I bet you anything they're gonna show this on GameStop. It's like, look, GameStop is, scamming people because they're not giving you the deal that you see. What I'm trying to show you. Wait, I thought, oh, okay, I have it right there. So if you want to copy and paste it to Google, right here. You see this? You see this? 1 second, okay? Give me a minute. So if you look at the price, You see this? Like, okay, Amazon costs $2,000. You know, Walmart's 600, whatever. Now the scope or the spec might be a little bit different, but the price is a lot lower. So that means you get the real deal right here. Okay, the real deal right here, with the exception of Newegg. Obviously, Newegg is a $4.50 for this particular one. For this ultra thin one, it's probably, oh, this is 14 inches. Okay, while Gamestop was 17 inches. So GameStop actually gave a better deal. So this is the part that I want to leave you with, okay? So this is what GameStop is trying to do, is at least being principled, right? When you see deals like this, they make sure that you actually get that deal instead of those overinflated price right here. They would inflate this original price, and then they would put $600 here when the $600 was the original price, right? But GameStop doesn't do that. Now, if this type of business practice moving forward decades from now, you better be sure to always, or people are gonna come into GameStop knowing that when they said that there's deals going on, there's actual discount being applied to. So I hope I make sense in that point right there. Is that when you do the right thing's gonna chase you. The right people are gonna come to you to shop. You're gonna, build that trust to your store. Amazon used to do this. Amazon used to be better at giving you discount because, again, they want you to trust them in order to be a monopoly later on. But currently, they could just do whatever they want because, again, nobody really care because they trust the brand for that purpose. Now, I hope like when GameStop become big, they're gonna continue to do the right thing by when they tell you there's a discount, it's actual discount being had. So hold on, let me and I did another search for this particular one too. If you look at GameStop, it's at $30 right now if you want to buy it. So let's search for this particular one. You see, on eBay, $27.99. On other site, $40.99. The same figure. On GameStop, $10. Right? eBay, $28.99. So again, GameStop is doing the right thing here by giving the discount when it's marked as discount. So, hey, just that alone, makes me trust them even more. And this is a testament to good leadership, Again, do the right thing when people are watching. This is the value that leadership is trying to create. Now, I hope they continue to do that decades to come. And I'll be shopping at GameStop from now on. Anything at all. Bags, wallet. They even sell bags and wallets. See this? See this cutie little thing? But anyway, so I'll just end it here. Thank you so much for joining, you guys. It's been almost 2 hours. Man, this is like the longest I've ever gone on. But so this live stream is dedicated to my little babies over here. We miss him so much. Little Toby. He's been a good dog. He's been with me for close to 11 years. 11 years, and we've been so lucky to have him in our lives. And it's such a heartbreaking events that happens. I'm gonna cry again, so let's not talk about that. But again, again, thank you for watching, and I appreciate all of you who's commenting. Thanks, Len. Thanks, Jay. North Stars right there. I don't know what you wrote there. And of course, Lionel, thank you so much for coming into my previous one. Downman and Migos, thank you so much for commenting, and I will catch you later on, okay?